G'day traders, Stacey Burke from Stacey Burke Trading. A short video today on daily process to form a trade thesis. Excellent question by Janrich. Appreciate that. Just what do I look for each session heading into to form a trade thesis? And I've kind of covered this before. I thought I did, but I guess in actual just a little bit deeper to understand, just going back through what I'm filtering through to look for which pair may give me the best setup, and then maybe which pairs are just, can't read them, I'm not sure, maybe they're a bit choppier or messy, or it's erratic, whatever, and I'm not interested in that. As I've told you before, I'd rather just walk away and come back the next session than try to sit there and figure out what it's going to do. I'm just looking for easy stuff because all my best results come from easy stuff, and whenever I sit at the screen or try to do more, I always catch myself and say back to myself, what are you doing? If it's not simple, if you can't look at if you have screenshots of your best trade setups and nothing looks remotely close to that, my motto with myself is, why am I trying to trade that then? Because I'm looking for easy money. Stuff that the market has, set up, it's setting up for a trade, not messy, whatever. So everything needs to be simple so I can duplicate it. If it's not simple, then it's going to be hard for me to reproduce my results over and over again, because I have to depend on me being exactly the same every single day. And I just emphasize my objective is to go there to make money. And so I know what a best trade setup looks like. I know how it should behave. I know what most of the variations are how they're going to present, and then obviously you have to be prepared to determine, is this something I'm really confident in? Is it playing out as it should? And timing all of that, understanding the timing. Maybe it's just an extra 45 minutes evolving. Maybe it's setting up. Maybe I need to come back later, whatever. But it should be able to be duplicatable and simple, so that you can reproduce your results. And I talk about scalability. That's critical. In order for you to be able to duplicate and scale it up, for me, everything's got to be simple. Like, I know that really confounds some people, but really everything that I do is so simple, because then I can reproduce that every single day. So identify where and how do your best trade setups evolve. Well, mine are pretty straightforward. There's two types, essentially. They're pump and dumps, or dump and pumps, which will involve stop hunts and peak formations, and there's a general pattern to that. Like, there's a pump candle. It's usually starts in the gap or right before a session. Many of you are hitting these trades now. You're seeing that, like, whether it evolves over the whole day, we could get a whole day that's a pump and dump, or it's a trend trade, which essentially it comes out of a geometrical structure. And you can't counter trend those, and there is no pump and dump. There's no pump and dump typically in a trend trade unless it's a counter trend pump. So the market's rolling over, it's falling, and all of a sudden they throw in a pump and dump setup, and trap traders counter trending. But that's different than the setting up into the session itself. Now, occasionally we get a trend trade that ends a move. We could be on the third level in a trend trade, but it's still 25 to 50 pips. So a gain for traders who are trading in both directions, or we might have people who are buying and going long, and then we have traders who are selling and going short at the end of that move. We can get two trades. My goal is always to sell high or buy low, whether it's a trend reversal or trading range. And so I talk about the 100 pip box. I look at the box each and every day. When I'm heading into a session, I want to know, am I up high or down low? So for people who are going to ask, how do I get these levels? It's the price. It's like double zeros to double zeros, 25, 50, 75 double zeros. It's a 100 pip box. And I'm somewhere, whether I'm in 25 to 50 pips outside of the high and low of that box, could already be in place as a stop hunt, a peak formation, a false break. We'll get those at the high and lows of the weeks occasionally. We just saw that this morning on the Japanese yen. We'll look at that. Euro yen was textbook. We had peak formations last night, a triple top, and then this morning a stop hunt just exceeding the double zeros, and a peak formation shorts from double zeros that continued from the quarter level down for 50 pips, I believe. We'll look at that. So again, a sell high opportunity. Now, false breaks, if you're buying up high, these moves can end at quarter level. So often an explosive move, maybe out of London or Asia, it can fatigue and end at the quarter level outside the double zeros, and that's where the gap time will come in It locks in. We saw that on Wednesday on gold, peak formation, consolidation on the upper level between 75 and double zeros, and it rolled over and dropped 3 levels into the open of the U.S. session. So 50%, 50 level of that 100 pip box, and I'll just fix that, can be resistance or support. So a market breaks through a level, traders are buying it at 50, the market's broken down through 50 and they're buying it at 50, and that may be a pullback into 50 for a continuation down off of 50%, as we saw in oil today. So timings, the original move, peak formations, all of this stuff, again, coming back to your playbook and just knowing what your setups should look like. But the timing of everything is where it's critical. So again, coming back to saying, well, how did you see this in live time? I really look for simple stuff. If I'm in level 1, I'm looking that it's going to be a buy. But am I buying, like on gold this morning, they were making you buy higher into peak formations at 50. So the market brought you into 50. There was 25 pips there, but it was an erratic creeping trend. It was an obvious trend that was going to have some sort of stop hunt through it. Because how do I know that? Because they were making you buy higher and higher lows, dragging you up higher into the session, which means at some point higher level longs are going to get popped, just like they did yesterday on gold. If you bought it at the bottom in the Europe Open and you held on to it hoping for more, they spiked you down before they went into the U.S. session. Importance of taking profits. So pump and dumps into level 3 and level 1. So typically you'll get a dump and pump, which we saw on gold on Monday, I believe it was. Could have been Tuesday. We'll check that. But they hit the previous day's low. They went back in London and hit the low of the day to reverse that and go long. That's a dump and pump. Same thing occurs with the pump and dumps, as we saw last night on gold. We saw it today on oil. They may return to the high or to the low, hit the stops, trigger breakouts, etc. And that can be a trade itself, but it's also a pump and dump as it breaks those levels. We saw the reversal trade set up as well. Traders hit trades in both directions, and again, there's opportunities in some of these pairs because of the ranges of movement for doing both. So consolidations out of level 3 and level 1 for trend trades, they do not usually have any sort of pump and dump. If it's a consolidation for an explosive move for a breakout trade, you usually will not see a pump and dump scenario in those setups. And remember, I am only looking for best trade setups. I'm not trying to read where it's going. I'm just scanning through real quick. Is something up high? Is it setting up for a sell high out of the upper part of the box, out of level 3? Or is it choppy and sideways and it's inside, it's around 50 and 0 or 0 and 25? Like sometimes the market will trade between 25 and 75. And we'll see that often at the low or high of the week because the market now may be potentially entering into a continuation phase or a reversal phase. So sometimes I will just avoid those until there's more clarity as the day evolves or the next day. If they've layered to continue into the next upper 100 pip box or pulled back and reversed, as we saw in some of the yen pairs this morning, underneath that 100 pip box for a move back in the other direction. Question I always ask myself, am I up high or am I down low? And as the week evolves, the weekly template is important because obviously we can get a buy low of the week, a buy low, or a sell high for a move of the entire range, especially if it's an explosive 3 days setup, a 1, 2, 3 down or a 1, 2, 3 up for a big vertical move maybe on a Thursday or a Friday. Let's take a look at the charts. So I'm just going to scroll through the major pairs. I have no, predisposition to anything. I'm just going to go through them. I very rarely ever trade the euro or the pound. I look at the yen crosses, but, I like to look at indexes. I like to look at gold and oil. But it doesn't matter. We can get 3 day setups. We can look at the whole week. You can learn something from studying the whole week. We have Monday. Monday traded down from level 3 on Friday into the 50% level to continue the move down. So again, if I was trading the euro, I'd be aware that the market had gone up and put 3 peaks in Asia or was looking for a sell possibly at a peak formation. There was already peak formations above 50. So again, I've talked about this. I just draw a line. And the market sold off in Europe down to double zeros. Is this a best trade setup? I suppose that obviously it worked out in hindsight. The only option I would have had was to sell off of 50%, regardless of how I wanted to trade that. If I came down into the US session, I'm not looking to counter trend this because I'm in level 1. I'm looking for a continuation trade down into the next 00 box. So again, continuation move, we have stops below 00s. That's the first giveaway into a session. Peak formation, again, the price action is where the trade takes place. But just going day to day, we're at level 3. We're in the upper part of the 100 pip box. My only option would be looking for sells. Looking for sells, the peak formation, they put a high a day in place. I'm just using common sense stuff, and this is just using numbers and price. Obviously, previous day's low, they go 25 pips below at the beginning of the Europe session. Now, this is an example of potentially where the quarter level can end up being a peak formation or a false break reversal into the coming back into the box again. They brought it back up to the high of day, just above the quarter level, which again, high and low of day, I did not mention this, high and low of the day always take precedent over everything else. The high and low of the day always take precedent over everything else. And what that means is that I could get up to the high of the day here, and I'm not at numbers, and I've had a stop hunt, I would break out trigger, everything else. This takes precedent over anything else in terms of number levels or anything else. So again, this is an ideal sell high setup opportunity in a broken down market at the high of the day. The market then goes into a consolidation. As I said, we can get markets trading sideways between 0 and 75 and 25 before they continued back down into the lower 100 pip box. And again, a sell setup off of level 3, 75. Now again, this market right now continues to move lower. We've triggered yesterday's low. It's Friday. This market could pull back, continue down. It may trend right into the end of the night. I have no idea, but we had a sell setup. If I was to have traded this, which again, I very rarely, if ever, trade the euro, I would only have been looking for a sell high out of level 3. We can look at the euro yen. We talked about this earlier in the week, the 3 peaks above 50, then the trading back into 50, which again is 50% into the peak formations for the sell high of the day, the high of the session, and into the peak formation highs off of 50%. This morning was a great example of a market that opened up. So again, coming back to the day itself, if I was looking at this pair, I open up between 75 and 00s. My first thesis is that we could get a sell high off of 00s. Now this depends on what time you're looking for the trade. Now we have a bull bear combo at 00s. We know there are traders that have shorted this. The market breaks down back inside before the Asian session begins. And again, there's only one option for me in this scenario. I'm looking to sell high at level 3 or above. We have trap volume in the upper quarter, and we have the previous day's low as a potential target. So again, I'd be on a smaller time frame. I wouldn't be counter trending this only because they've already gone up and put a peak formation in, which on the smaller time frame is where I would be looking for the pump and dump. Remember, I said a trend trade will not have pump and dump, which means that you won't see these vertical thrusts in just a normal trend trading situation, and we'll look at some examples of that. So we get the pump and dump into the peak formation, into 00s. Market breaks down inside, continues to break down just prior to the open of the session, and then engulfs, breaks down, second 15-minute bar continues that move, and again, level 3 for the sell high opportunity. If we go back and look at the difference on Wednesday, the market was in level 3 again, level 75 to 100, level 4, but level 3 up high. But the move goes down and price action reverses. So again, on your 1-minute chart, the market, even if you shorted this, as soon as you get down to the previous day's low and you've taken out these higher level lows, again, notice the difference. The volume, the market has trapped volume, but you're inside of the entire box with the volume, as opposed to having volume trapped up high with a gap down below and traders who were long into the night before. So filtering out, not just looking to try and read it's level 3, I want to sell it, but looking where is the best trade setup. When we look at the yen's been trending, so we'll just zoom in on this. as opposed to the euro yen, which was broken down. So the euro yen may have been the easier trade for a short today because it's already broken down, whereas the yen went vertical, which still was a pump and dump, and this is the high of the week. Gives us an engulfment for a first bar trade. Vertical pump and dump. 1 push, 2 push, 3 pushes, pin hammer just before the end of the hour and heading into the open of the session for a vertical move. And notice again, higher lows suspended in the upper portion of the box. So an example of a false break, reversal high of the week, and a vertical fast stop hunt trade. Best trade setup. Great trade. Now again, I'm not going to hit all these, but these are the setups I'm looking for, whether it's on a major pair, gold, NASDAQ, the DAX. I'm starting to look at the DAX more, oil, whatever it is. I'm just looking for simple setups. So we get the blow off, the vertical move through double zeros. It consolidates. So again, don't counter trend an explosive move until it goes into consolidation. The market then gives us the reversal, 3 pushes. We'll look at smaller time frame, 1 minute chart. The market goes vertical. We have a gap. So again, just paying attention to little obvious visual triggers. The volume is held up above the breakout level. They reverse it. Even if you waited for the consolidation and the continuation, this is a zero stress trade setup. Now if we look at gold, this is a really great example. Coming into the session the previous evening, we had peak formations above 50 to 75 on the third level. They dropped it down into level 1 and proceeded to trade back up later in the U.S. session and put in peak formations above 50 before reversing. So 50 potentially on level 3, between 50 and 75, is a sell level. They've already traded off of that twice. We have peak formations. So you'll notice the price action prior to the session beginning was already starting to creep up with a creeping trend, taking traders long into 50. So the decision I made this morning, and looked at oil, and we'll look at that in a second, was that oil had a much more expansive range and cleaner price action, and I knew traders potentially could be getting a short trade at 50, but I also knew that they could be trading right back into 25. I didn't like the idea of being long. This is again an example of a consolidation, no dump and pump. Consolidation, so again, get Peter Brandt's books, a rectangle, level 1 for an ascending triangle for a breakout trade, but you're getting longs trading into 50. Eventually they reversed and broke structure, went back up one more time, gave you the M. Traders who were patient enough to hold on to this probably locked in 50 pips, 25 for sure. But again, the way that this chart was, I knew that there was a potential for this to reverse, but I didn't like the setup for my first choice this morning when the markets opened. Looking at the NASDAQ, some traders this week have sold the London sessions and absolutely killed it. And again, if we zoom in and just look at the box, again, first thing I look at is where am I at? We're at 50%, then we get the pump and dump. The market, some traders I know went long, but the price action, again, erratic, but they go up to level 3 at the end of the equity hour, go into consolidation, and they reverse the market out of level 3. You've heard me say this. The market was in consolidation at level 3 and reversed. Do not counter trend a level 3 trade. Traders shorted that. We get a break in structure. Again, double zeros, double zero to double zero. And into the U.S., they pull it back to 50% for the continuation. And notice again, they put a low in place. This is a low-hanging fruit for the easy continuation. Now, traders who enter into the NASDAQ in that first hour, as I mentioned to a trader earlier this week, just some of the U.S. markets, once 9:30 hits, don't be surprised if they do a stop hunt or a vertical move prior to moving it in their intended direction. Very common at the open of the U.S. markets. The next day, we see the same continuation off of 50% in Asia. They go 25 pips below the box and into consolidation. They reverse the market. Again, level 3 consolidation. And they go up into the 50% level, into the high of the day. It doesn't get there. It's weak. It fails. Weakness. Sell weakness for the continuation short in a broken down bearish market. So each session, I'm just looking at where are the numbers, where's the box, what time is it, am I up high, am I down low? Yesterday we saw a great example of a market trade down into 50% into the low of the day and reverse for a move back where? To the high of the day. And it continued higher into the London session, coming out of level 1 in the next upper 100 pip box. So again, it's all about how price behaves. So I mentioned to a trader the other day, I have no idea. I don't predict. I don't sit there and go, I think it's going up today, I think it's going down. I'm looking for the setups, and I don't care. And analyzing it, all that stuff is great, but it doesn't work in live time. I want to take a setup, and if you have a thesis, again, it's a setup that I want to be able to put some size on. Having a directional bias and analyzing the market is fine, but I wonder how much heat can you take if you get the market. Let's say the market's going up. It might still do a 50 pip stop hunt before it goes up. So I want to know if you're going to hold on to size through a 50 pip stop hunt because you bought high because it's going up, but they put 50 pips into your position before they resume that up move. So typically those stop hunt moves will be fast and vertical. I would rather get the 50 pip vertical move than to be underwater 50 pips with size, which would blow me out or stop me out. And that's the concept I'm trying to get across, is I'm looking for setups for a market that's going to go in one direction for that move, for that reason, because it's going to get people who are in the money, or it's got traders that are trapped, whatever that is, and it's going to go for 15, 30, 45 minutes so that I can get 25, 50 pips or more if it's the U.S. session. That's my objective. And this is my point exactly with this chart today on the NASDAQ. Pre-market, they take it up above 50, and where do they go? Just under 75, level 3. So again, something that's going vertical like that pre-market, I'm already thinking pump and dump, and I'm thinking let's see what happens when it gets up to the 75 area. It doesn't get there, it comes right back into the open. Into traders maybe that were chasing this long on a longer time frame. It's a trend trade. They go up and 1, 2, 3 at the high, engulfment candle. It goes sideways. You could short this anywhere here under the high. You're shorting under the high. It consolidates again. If you're in, you could add to this because it's going to go vertical. Or you can get in here and still have a max stop loss, 15, 20 pips, whatever. That's the great thing about these numbers, is that if you're getting in near or at a quarter level, I'm not saying to sell the high. I'm saying these are your reference points for max stop losses. The first place I'm targeting, obviously, is 50%. The market trades through that and consolidates, but the low of the day, and again, we have lows suspended above the numbers. To me, that's low-hanging fruit. That's an obvious indicator they're going to go back through that level. Creeping trend up, escalator up, elevator down. A great example, a pump and dump into level 3 for a fast vertical move down. This morning on oil, this market first thing that caught my attention was the peak formation M pattern above double zeros on the rollover and the breakdown below double zeros. So right away I started to watch this market. And again, whenever I see pins or pin hammers and a vertical candle in pre-market, I'm already thinking pump and dump. So to me, the high is locked in. It should fail into this M. If this market's going to roll over, the market should fail at this M structure. I'll just drag that across. They poked into it, it broke down again, they went vertical and engulfed it. So traders who sold the initial engulfment, again, notice something about the engulfment. It's a large candle. And whenever you get that on a first or second bar, be aware that they'll do at least a 50% retracement into this big bar, which again is pinning into the numbers. I sold it on the third candle as it was breaking down. Because why? 3 pins, 1, 2, 3 into the engulfment. I wasn't getting the 50%. These candles on oil move very fast, and I'm reluctant to, I don't mess around with this market. I took the short. A great question from a trader is, do you hold on to positions? No, I was fully out, but I shorted this market again on the right shoulder. When I saw the middle structure up high, I shorted it again. And I thought, okay, well, that's pretty good. But the market then proceeded to come back in 3 pushes, at which point I was sort of, sitting there a bit hesitant. But then I thought, no, I got to sell this at 50. And I sold the third one at 50, 3 peaks into the falling lows. But the main reason, of course, was I knew that there was a gap in a space that this had. I was expecting the first move after my first trade, the second one to fall through, and this one, as I was out through onto the quarter, pulled back. But this lower low, again, is an example of a pump and dump into an existing short trade. 1 push, 2 push, 3 pushes, consolidation, vertical move. So the question was, do I scale in? Up high, I was happy to add. The second position, I didn't have any size, just a normal trade. Third position, again, same thing, no trade, tight stop, peak above the high. So 15 pips, halfway between the box and the market. And my thesis was this needs to go right away, which it did. It pinned back, but I was happy because it was broken down. And again, this pin took me out. I put a 25 pip target in. I knew it could fail inside of this level. It continued down. I didn't care. I was quite happy to lock it in. So again, with oil, you can see these types of markets can come right back very quickly, but this was an ideal textbook setup, the pump and dump into the rollover and then into the beginning of the session, up high in the 100 pip box. I knew this market could keep going. I didn't care. I wanted to get off the screen. I don't take 3 trades often. It was a gift. Shut it down, walk away. So each session, I'm just going into the session. Like right now, as this stands, we're inside of a 100 pip box. We're at 50%. The market could easily trade back above, or it can trade into this peak formation, and we may see a continuation down. If this market was to consolidate and come out of that high and break back up into the upper box, then that thesis would be void, and I'd be looking for some kind of trend trade out of level 1 going long. Chances are we may see this market continue down. I don't know. It'll all depend on how it sets up. So hopefully that makes things a bit clearer. I keep it as simple as possible. I look at the 100 pip box, and again with this pair, maybe it's going to go up, maybe it's going to go down. This may not be set up properly for me. I may get a better trade set up on some other pair. I'm looking for something that's simple, level 3 or level 1 consolidation. Sell high. I want to see a pump and dump before the session, or a stop hunt to the higher low of the previous day or the current day. Something that gives me some directional bias for a sell, a buy, or a trend trade. Keep it simple, traders. Something that you can reproduce and duplicate every day. Hopefully this helps. Keep it simple. End the week strong. Head into the weekend on top of your game, and may the markets go with you.
Hi traders, it's Stacey Burke from Stacey Burke Trading. If you haven't done so, please head over to my website at staceyburketrading.com. I create updates on almost a daily basis, and I would love for you to receive them. Just click on the blog. If you want to enter your name and your email address, I'll send you my free audio program, the 7-Step Daily Routine for High-Performance Traders. This is essential knowledge for all traders in all markets, and this is for helping traders to master the market with discipline, confidence, and a winning mindset. I appreciate all your feedback and comments. As always, traders, stay disciplined, and may the markets go with you.